Good morning, everyone, and welcome to Morning Market Movers, where we do live analysis for day trading and take a look at hot spots in the markets for today, Thursday, May 26th. My name is Todd Rich. I'm with Nadex. With me, as usual, from Keep Trading Simple, the CEO of Keep Trading Simple, we have Brian Caprice. And really what we're going to be looking at today, just a couple of things. One, we are going to go through with the Fed minutes, and we're going to definitely have to talk about that. The Fed minutes from yesterday, and just the high level points, if you haven't caught them yet, the Fed did say they're going to do a couple of incremental half-point base interest rate, 50 basis point interest rate hikes for the next couple of sessions. So we're going to go from where we are right now at 1%. We'll be up at 2% very quickly because we've got June and July meetings. So that would put us at neutral. But what was really interesting is Powell was very clear. We are not going to stop there. That's not a stop and pause. They're absolutely prepared to go into restrictive mode by raising interest rates above that 2% target, going towards 3%. And they're going to continue doing it until we see inflation get curbed. And now what's really interesting is normally that would crush the markets. The markets have already been crushed, the equities markets. And what it really has done is traders like it. They want to know that something is being done. This actually goes back to what Brian and I were talking about yesterday with the Bill Ackman comments that either the market has to get totally obliterated or interest rates have to go up and inflation has to get curbed. And the fact that the Fed's going to step in and now they can see that the Fed is actually going to be doing something aggressively and actively, some of that selling pressure may come off of the markets a bit because they've already been punished. All right, so that's kind of the headline, but Brian's going to go through the news, and then we're going to look at equities. Definitely have to take a look at the equity indices, especially since we've got the PCE, the personal consumption expenditure number, the inflation number tomorrow. So that's our goal today, go through those equities. We'll also take a look, because we're talking about inflation, we'll be taking a look at nat gas. That's absolutely, we've been talking about that for a while. It actually is on the, right in the market section of the Wall Street Journal. I mean, people are finally paying attention to natural gas. We've been talking about it. I mean, it's tripled in price, and it's one of the leading causes of the inflation that we've got. I mean, it's definitely contributing in there, along with oil. Before I flip it over to Brian, I do need to share this disclaimer that trading involves risk and may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. And just a quick peek, I mean, this is the nat gas. I mean, if I keep on back further, we know it was down around 6. Here we finally punched above 9, and we seem to be stabilizing above $9. Natural gas normally, below 3. But people are stockpiling it. Demand is up. Supply is down. One of the huge components into the inflation that we're seeing. Here, Brian, I'm going to flip it over to you, and let's go through with more about what we saw in those Fed minutes, and then get into those equities charts.
Yeah, I mean,
good morning to Jen.
Yeah, Jen's here today. It was a daddy and Jen night, so now she's super clingy today. So yeah, my wife is actually at my mom's house today taking care of her with Kip. And Jen is like, "Oh, Daddy, I'm gonna sit on your lap. I'm gonna do stream today." I was like, "Okay, let's go." So she's on her play. So she probably won't say anything or even acknowledge anybody exists, but
that's okay. We love having her here.
She's at that stage today. But you can see, it's funny. You guys see the picture from the Tuesday presentation. You can see how much bigger she is right now. So can you wave real quick? Wave the camera right there. Can you wave? Just wave. No? Not today? Nope. She's like,
nope. You crazy?
But yeah, so you can see she's much, much bigger. So I really need to update the picture. So yeah, I mean, the Fed, I'd say the one thing that the Fed was able to do yesterday, I wouldn't quite say that they are aggressively taking action, but the one thing they did is they did take the uncertainty out of the market, which is what the market's like. 0.5, 0.75, 0.25, when you don't really know, there's a lot of, again, there's increased volatility, there's increased, not necessarily fear, but the anxiety behind which ones they're going to be. Are they going to do anything? Confirming that it's going to be the 0.5. I mean, one of the things that Powell is I would say that he is not a adventurous man. When he says, "Oh, we're going to do 0.5, that's pretty much what we're going to see is 0.5. And the markets are like, okay, great. Now we know exactly how to price everything and we know exactly what's going on. They're not going overly aggressive. And then again, as you pointed out, Todd, the comments that he made about, listen, that's not a stopping point. We may have to go farther than that. It's, because again, some of the people like Bostic, it's like, yeah, well, we're going to wait and see. We're going to do this.
No.
At least Powell has acknowledged that they have, and again, he's admitted this, that they should have done things sooner than they actually did. Their goal is going to be not to overshoot in the other direction. But I do honestly believe that I wouldn't be surprised if it's 0.5, and then as they're waiting to see what the data looks like, if they throw like a 0.25 in there just to keep going.
In September, yep.
Yeah, just because, and it's not so much as a wait and see, but it's like we know we have to go further, but how much further do we need to go? Is kind of where I kind of see it going now.
I would agree with that.
Is that
and
going
then
to be the
and
end?
then at the end of the year they could just give another half point, and that would put us right up just shy of that 3%.
Yeah, and that's right now. That's I mean, here's an article from Forex.com, and they're talking about it. If we, this will be the third 50% hike, and take the interest rates to 2% in July. With inflation skewed to the upside, markets are pricing in rates to finish the year at 2.75, although only with a 60% probability. Because again, people have said that that's how high we need to be in the 2 to really kind of up into the 3 range, 3 to 3.5 range is where they expect us to be. When they talk about the 5 rate hikes, 0.5 rate hikes anyway, that's about where it was going to be. The 60% is because they don't believe that the Fed is really probably going to do it. And again, a lot of it goes back to inflation and the factors that are not controllable. I mean, they can control interest rates, but it's one of these things we've already seen. Mortgage rates skyrocket compared to what they were, not at historical highs, but short term they are high. We're already seeing the housing market starting to be affected from it. And again, home values have gone up obviously because with inflation everything goes higher. That's why I said when you guys, for those of you that have jobs and do like your annual assessments, make sure you tell your boss, I need an 8% raise this year. Inflation's up 8%. The cost of living is up 8%. I need an 8% cost of living adjustment this year, and see the face that they make. So home values are at least higher, but the rates to pay for those things are higher as well. If those start to turn again, people are going to start, well, hey, remember in the housing bubble when the same thing happened in 2008, that's exactly where gas prices were back then when it crashed as well. I mean, there are a lot of signs there. I think they're a little bit more weary of it.
And we've got that number today, by the way. We've got pending home sales coming out.
And it's expected to go even further down. So so I mean, it's one of those things. A recession is not. I mean, everybody sees recession has such a negative intonation. Recessions are not necessarily always bad. It is a natural cycle of the market. You go forward and you pull back, and you go forward and you pull back, and those are natural cycles. It's actually healthy for the market. Everybody just, has those big memories. And again, I graduated college in 1999. My generation is the one that we got out of college, got jobs, and then the market dropped 50%. And then for the next 10 years, it fought all the way back again. So we could finally we can afford a house now. We've been out for a couple of years just for us to buy houses. And then it crashed all the way back down again in the housing bubble. So my generation has been there for like the perfect timing of, that's it, we're out, let's get a job. And then 401k drops all the way down. And then we buy houses, and then we had to buy them somewhere in the peak area because you rent first for a couple of years, and how it works. And
we're out to get you.
My generation has been there twice, and then it's kind of like, hey, I have kids, and then bam, we have a pandemic. It's like so I'm nailing all of them at this point. So this is So anyway, we've seen it. The housing thing is definitely something because again, speaking about this too. It is an orange number for today. It can sway the overall market because, again, when people start looking at the economy side of things, that is a pending home sales thing. Pending home sales is not a stock market thing, but there's, because the two are somewhat, the belief is that they are actually linked. This is actually a number today, and with it being 10 o'clock, I do think that it could potentially bring in some reversal signals today. Just because yesterday was a positive, things are up a little bit now, but if this comes out really, really bad, that's going to be the hot button that kind of all the news agencies will jump on. And again, understand too, my wife, obviously you guys know, was from Canada. She's moved here and things like that. But we have a lot of deductions and great things that we have with mortgages and for taxes and things like that. They don't have that in other countries. But once it becomes more expensive and more of a risk and it's better to rent, this number all of a sudden starts getting really, really crazy. And that's where the economy starts to go nuts. So, just kind of a word of warning at 10 o'clock today. As far as big stories, Honestly, there's not that much. I mean, today, obviously, GDP number came in less than expected. Again, it was already expected to be negative. It was already minus 1.4 last time. Yeah, it's red, but again, it was expected to be negative. There was that negative intonation with it anyway, as far as a negative number. It did come in lower than expected, but not much different than it was before. Unemployment actually came in better than expected. Again, it's only 7,000 jobs, so it's not a major percentage there. But again, it is kind of, you see one red, but it was expected to be negative. This one you expected it to be higher, and hey, that's a great number, right? Not as many people are getting laid off, and that hasn't been the problem, right? The problem is we have too many job openings, not enough people willing to work. Besides that, there's not really a whole lot besides the FOMC notes yesterday. The Bank of Japan basically says that they need to continue monetary policy easing. The reaction of the market was basically nothing. I mean, the pound
no
yen and the
surprises
dollar
there.
yen went up like a little bit, like right now in 24 hours. He makes a comment about that, and the dollar yen is up 14 pips. So really no movement. The pound is finally seeing some return of strength back again, 70 and 108. Again, the yen helping a little bit here, but you can say euro pound, it's down about 7. So not really a big mover right now. And again, there was no news for the euro or the pound, so this is just natural fluctuations back and forth. And really on the home front, there really is nothing as far as that goes. I love this. There's questions in here about, is the Fed soft landing realistic? It's funny that they talk about soft landing, but then the next story is, are they going to have to drive us into a recession to get us back under control? So who knows? But everybody's doing it. South Korea, you can see 12 hours ago, I guess 11 hours ago, raised their interest rate from 1.5 to 1.75. So everybody's doing it. It's just what you have to do right now to curb global inflation. Now the VIX is lower, and again, it really did nothing in the overnight. After Powell spoke, it took all the uncertainty out of it, drove it straight down, and we're kind of at that same level right now. Again, it is red, so all the indices are a little bit down. If you guys were trading yesterday, again, one of the things we talk about. What?
All the indices are a little bit up.
Yeah, they're up. Did I say down? I meant up.
Yeah.
I'm sorry. I'm just so used to saying down. Yeah, they're all up right now.
You have to start changing. It's been so many weeks of down that here we go. We're going to try to actually have an up week.
Yeah. I meant the VIX is down. I meant because the VIX is down, the indices are up. But it's just I've only had, I don't know, a third of a cup of coffee. So, yeah. But yesterday, I just wanted to point something out. How I talked about the 10 o'clock today, the reversal. You guys can look this, and again, we'll put it on a 15-minute chart if you really want to look at the level we talked about yesterday in the ES, the 39.73. It hit that level, and if you guys want to do your homework, guess what this means? It means it hit that level at 10:30 in the morning with the perfect reversal play. So even though it ended up green, we went up to a level of confirmed sellers in a gap, right, supply zone. At 10:30, where the reversal time is, Lily brought us right back, went right back down to the origin of the move, and then continued higher for the day. So,
there was that reversal.
There's the ES. The NQ had the exact same reversal in it. The YM, again, did the same thing, tagged the level we had talked about. It pushed it to the brink. It didn't break it, and again, reversed back down. And then Russell did the same exact thing. Came up, tagged the zone right around the 1800, and reversed right back down and slowed down where we were. So I think it's going to be the same idea today, is really kind of see where the indices are. And again, drop it down to a 15-minute chart to get a more close proximity of things. We may potentially be having the top put in right now, but for the most part, the data wasn't horribly bad. Again, we are at a big psychological level. I mean, 4,000 flat, 3 triple zeros across. That's a big number. It's going to be like 1,800 is for the Russell. So it is a point where we will have some magnetism towards that number. For the most part, though, there's no news today besides that pending home sales number that can really drive it. Knowing and getting that uncertainty off the table should be good for the market overall today. So there's really no outlining factors. The big thing that we need to look for and prepare for is tomorrow morning with that PCE. Now, again, it is going to be lighter volume tomorrow. There will be a ton of people leaving today and saying, listen, I'm leaving a day early so I can get that extra day for the weekend. We'll kind of see how that, kind of folds out. But tomorrow at 8:30 a.m. tomorrow morning, it could be a crazy open, because if this number is higher than expected, again, the Fed's not going to change much. We know exactly what they're going to do, but the question is, will they go do that 0.25 afterwards, or is what they have working, is 0.5 enough? And maybe they say, hey, listen, remember we said 2? We're going to do 3, and then we're going to take a look.
They'll throw another one in
this
there.
Number is bad. Yeah, so I would say for the most part, this can really only be, here's the thing. I don't think this can change too much tomorrow in the markets. The only thing that can benefit from this one is if this figure comes in lower than expected, I think this can provide a big boom for tomorrow morning. And this will pop out before we're on tomorrow morning. So I do think that this has the potential for a big push up. If it comes in at 0.3 or 0.4, I really think that we may get that 0.53 in a row. but I really think they're not going to say much because he just said, trust me, they already know this data.
He just told us they're ready to go.
He just told us
into
exactly what they're going to do.
restrictive. Right. Hey, this
Yeah.
is
Yeah.
the numbers coming here. We're not going to
Yep.
slow down. We're going to stay on the gas and
Right.
and keep raising
But if it
rates.
comes in 0.2, if it comes in at 0.2, showing that, oh my God, this is what we're doing is working,
or
we won't need to do
yeah,
anymore, and the indices are holding firm, this could be a big boom for the indices tomorrow morning. So
the
again, I
slingshot,
think
yeah.
all the indices, you know, I think tomorrow they have more potential for long. So I wouldn't be surprised today if we see a little bit of a pullback for that long. And they're all basically the same. I mean, you could literally do the same thing. They're all finding tops in here. Again, NQ, we know we have a level, and it is a 50% retracement level. And that level sitting up here right around 12,050. So again, a couple reasons why that we should be, again, gap, 50%, supply zone, it's all sitting right there, right around the 12,050. So that would be my NQ number today. Look out for, particularly around 10:30. YM's got some stuff there as well. We are more in a racetrack over here though at this point. I guess there is a little bit coming in right there, which is 32,400. Again, same thing, a little bit run, kind of rally up, and then kind of a reversal at 10:30. And then Russell is kind of the same thing. There's some zones up here. This is an old zone we talked about before. We've already had one trade out of it, 1827, but I think this got a little bit harder of a run today. Looking at them, we're looking at kind of the broad over right now. The indices are all up right now. The cryptos are all down about 2%. Ethereum's down 6.7%. Doji down 5.7%. So it looks like people are sending money back into the kind of the you know, I don't want to say risk on because risk would also be there, but it's kind of like, let's go through the moderate risk. We know what we have. It's a known commodity right there. And we know, again, they're raising the dollar, so there's no reason to put it in another currency, right? If you're using Bitcoin as a currency. So they're pulling it out of cryptos and putting it back into the stock market.
The stock market.
And the dollar is basically flat at 102. It's kind of cycling back and forth, but it's down 0.07 right now. So, unfortunately, the two inflationary commodities we are seeing up. Oil up 0.65. It really hasn't left. Yesterday there was a smaller downdraw than expected. It didn't really do much in here. We're still kind of basing sideways, and again, we still have this 111.77 holding it in. Natural gas, unfortunately, it did pull back from yesterday morning's high of 940, but then it came down and grabbed that same level where all the basing came off of, where that gap occurred from, and is rallying back up again. Thankfully, we are going into the seasonal time where we should see more reductions of this coming down. Thank God it's not fall right now. This would be over $10. You know, we don't have any more cold snaps. I think at this point, our cold snaps and frost, I hope we're done. You know, we're almost in June at this point. If we get frost in June, that's it. The whole global warming thing is out for me. But yeah, at this point, again, I still have the same belief. You're looking for pullback opportunities, and again, we had a basing level. We talked about that 890. It hit it again. It based in here and finally broke through, and then that old selling area became the new buying area. And again, supported, came higher. Look for this one to potentially go up to 940, and we'll see what the inflation story looks like. So. It's amazing. Almost every Facebook article and every post that I see right now is all about gas prices. They're saying that the average is over what it was in 2008 when that crash happened. And people are now changing their habits. People are changing their summer plans now based off the price of gasoline. So it just kind of is
that's the trick with natural gas is it's not one of those things that you can, I'm going to drive less. You can do it with gasoline. The elasticity on being able to adjust your natural gas consumption doesn't work that way. So this is one where I would expect to see continued volatility, particularly with people trying to stockpile and getting ready for the fall when we're really going to need it to heat everything. But yeah, it's not so easy just to turn off your natural gas. You can.
Yeah. And the one thing too about this natural gas, just so you guys understand as well, you know, on a consumer basis, you and we're not using natural gas besides to heat and cook in our homes. But a lot of times when people are looking at the price, if I have to spend $5 or $6 a gallon to drive my car into the city to park, or I could take public transportation, you'll see public transportation rates go higher. Most municipalities are using natural gas buses and things like that for municipalities. The rates may even rise there. We're going to see more inflation across the board. So what's scary about this is what's coming in the future. If people stop driving, that means that the fall's earnings reports for retail sales and things like that are all going to be much lower. And again, if we're raising another percentage point from now till September timeframe, that's going to drain on the economy. Then they're going to say, oh, wait a second, earnings are down. Well, yeah, that's because of the inflation in some of these things. As well as the higher that this goes, more of this inflation is going to get passed down over
I'm waiting.
Yeah,
I'm
in
waiting
gas
for
and
our,
food.
our drillers. At some point, we've got a lot of different drilling organizations, particularly in Texas, that could be taking oil out for gasoline, for oil. But one of the byproducts of that, a significant byproduct of doing that, is actually natural gas. I'm surprised we're not seeing an uptick in that activity with prices for both oil and natural gas up where they are.
And this is
At some point,
unfortunately, yeah. I mean,
there's going to be some guys who go, you know what? Yeah, I'm going to go after the money, and then there'll
there's
be a
people doing it
stampede.
already. Yeah, yeah. I mean, and unfortunately, I mean, to get a true gauge of inflation, it's not employment. It's these two factors. I think you need to look at. Again, the prices of gasoline drive so much in our country behind the scenes, and natural gas is the same way. And it's nice that we're talking about raising interest rates, but there's still no solution, whether it be alternative energies, electric, anything else. The lack of actual comments
You know,
about that is really what's most disheartening in this whole thing. Yeah, we do have the ability to do new wells and do all the other things. But again, there's so much investment that's being sent overseas for so many other things, and it's kind of like this is the true gauge. This is what's crushing people right now,
so
across the
and
board.
we
It
got
doesn't
that
matter who it is.
number.
So sorry.
We got that number tomorrow morning. That PCE number before we go on. So don't forget that. We could see some volatility in the markets tomorrow morning.
And speaking of that, OPEC just a little while ago says, "Hey, we're gonna hear the policy on June 2nd meeting and raising it, exactly with what our target was before." So
Yeah.
OPEC is still not going to raise it to help lower the prices at all. So.
All right. Listen, with that, any questions for Nadex, please email us, customerservice@nadex.com. Brian and I are also accessible. Brian's email, support@keeptradingsimple.com. A quick recap of what we're looking at today. We just got those preliminary quarterly GDP numbers. The U.S. economy is starting to shrink a little bit, but the Fed minutes from yesterday, 50 basis point moves to be expected in June and July. The markets like that certainty. They like to see that something's happening. The Fed's going to start doing something about inflation. The Fed comments that they're not going to slow down, that Powell said they're fully prepared to go into restrictive mode and push interest rates higher than the target rate to bring that inflation back down. Markets are liking it. Equities higher yesterday. They're trying to open higher this morning. And then we'll get that number tomorrow morning. Again, could be a thin trading day. We could see some extra volatility. But right now, it looks like the equity markets are trying to have a green week, which we haven't had in quite a while. So it's gotten so used to saying down, it's kind of weird to say to be saying up. With that, Brian and I will be back tomorrow morning. Hopefully you join us. We will not be going Monday, even though Nadex is open on Monday for FX products. A lot of the markets are closed. We do stay open. I mean, it's a U.S. holiday, and people do trade products that are outside the United States, particularly foreign exchange. But Brian and I will not be on Monday, so we will catch you tomorrow, hopefully. And if we don't, enjoy the holiday weekend. And in the meantime, good luck in the markets, everyone. Thanks for joining.